In this video, we're going to have a look at Wells Fargo Company, ticker symbol WFC, a bit about the company, how the company has performed against the S&P over the last 20 years, the dividend history, plus a look at which financial institutions are invested in the company, then on to the financials and forecasted price targets, also what a good buy price would be. My name is Alex and this is my dividend income channel. Let's have a look at the company overview. Wells Fargo Company is a large US financial services founded in 1852 and headquartered in San Francisco. Wells Fargo operates through three main segments: community banking, wholesale banking, and wealth and investment management. Now let's have a look at how the stock has performed against the S&P over the last few years. If you'd invested $10,000 specifically on June 19th, 2013, this would have bought you approximately 245.94 shares at the closing price of $40.66. Then as of June 19th, 2023, the value of your investment would have been approximately $13,714.51 based on the closing price of $42.18. That is just over a 37% increase. If we reinvested the dividends, we would approximately have 327.47 shares, an approximate value of $13,807.78. That is only just over a 38% increase. This is an average annual return of just 3.28%. For dividend payments, you would receive $98.10 quarterly and $392.40 annually. In the same time, if you had reinvested the same amount in the S&P and reinvested the dividends, the value would be worth $32,491.59, a total return of 224.99%. So compared to the S&P, has not performed well. If we go back 20 years, so investing $10,000 on 19th of June 2003, that would have got you 391.39 shares. If you'd reinvested the dividends, it would be worth approximately $29,075.65, a total return of 191.03%. giving you a total of 689.97 shares, paying approximately $206.99 quarterly and $827.96 annually. If you invested the same amount in the S&P and reinvested the dividends, you would have $63,499.27, a total return of 534.54%. Overall performance is not great in comparison. Please note that this is an estimate based on historical data and does not take into account taxes and transaction costs that may have incurred. Let's have a look at the dividend history. Looking on the Wells Fargo Investors Relation page, they have historical data starting from 1995 showing the dividend payment history. They had regular annual increases all the way up to 2008. After the financial collapse, the dividend was understandably cut, but by quite a significant amount, going from 34 cents to 5 cents in the second quarter of 2009. The dividend then recovered with regular increases, taking it up to 51 cents by the third quarter of 2019. They then cut the dividend a second time by 80%, down to 10 cents, partly due to COVID, plus their damaged reputation from a series of scandals and declining revenues, but mainly from the Federal Reserve putting certain restrictions in place during the pandemic to ensure the banks were well capitalized. The dividend has increased quickly, back up to 30 cents, but as an investor it has been a rocky road and explains why the return has been so little over the last 20 years. Let's have a look at the financials. Wells Fargo market cap is currently $158.27 billion. Payout ratio is only 33.24%, so got plenty of room to grow that dividend until they decide to cut it again. Cash to debt is $79.02 billion, which is in the green, which is great to see. Revenue has been a little up and down. If we switch to quarterly view, we can see the trend upwards in the last three quarters. EBITDA on the up as well. Free cash flow okay. Net income and EPS up on the past quarter. If we go back to annual, cash to debt has been good since 2018. Dividends we've talked about, which is there, and shares outstanding, they've been slowly chipping away since 2014, which is good to see. What are the financial institutions buying and selling? Institutional investors hold a majority ownership of Wells Fargo through 75.54% of the outstanding shares. We can see from the top 10 institutional investors, 6 have been buying, 4 have trimmed down their positions, but still own large stakes. A big sell from SSGA Fund of 7.8 million shares, but even bigger buys from Norges Bank at 17 million and JP Morgan at 10.7 million and Fidelity Management with 6 million. So massive buys. Clearly they see a lot of value in the stock at this price. This instills a lot of confidence. Now, what do the analysts think? Let's have a look at the 12-month price forecasts. CNN Business have an average 12-month price target of $47.50, 12.5% upside based on 26 analysts. Tip Ranks have an average buy price of $47.16, 11.81% upside from where we are today based on 16. And Zacks have an average buy price of $48.14, 14.13% upside from where we are today based on 14 analysts. Let's have a look at the stock price history. If we zoom out over 40 years, we can see it's been slow progress. The two major dips tying with the dividend cuts. The stock price had a 52-week high of $48.84 and a low of $35.25. Its 52-week high is what analysts have the price target for it to be in the next 12 months. The dividend yield is currently 2.84%, which is okay. Not having an enticing yield, you want to at least see a lot of potential price growth in the stock. If we look on value investing using the dividend discount model, a fair price would be $45.13. With a margin of safety at 20%, a good buy price would be $36.10, which is very close to its 52-week low. Based on the dividend history and slow growth, I do think there are better opportunities to invest. Thanks for watching as usual. If you've enjoyed the video, please like and subscribe.